What's happening, guys? I'm Kobe Chowan here with Craig McCoy, and welcome to our latest Tuesday training, where every week we bring to you a live training from lead gen and AI all the way to business planning and goal setting.
You have the new version and the old version. We collaborate to make it awesome.
If you want to join and jump on the next Tuesday training, join our school platform below. It's completely free. Click the link below, and we'll see you there.
All right. So on that note, before I get started, it's already 10. So still only a few of us. But while we get started, hi, Elisa. Um,
Hi,
so
Craig.
as you guys probably all know, Kobe had a baby. I am now, because of that, a grandfather. Kind of strange. I know I look so young. It's how is he a grandfather? I'm like, I know, it's so weird. But here we are. I'm that guy. So yeah, Kobe is not going to be here today and probably probably next week either. But yeah, and so we're small. Today is small. So we can kind of keep it kind of short and sweet, depending on what you guys want to talk about today. We're going to be rolling out a few things for our brokerage. Hi, Jamie.
Hi.
Um, and that we're gonna be doing a big push on the investor side. And so next week we're going to go through all of our offerings on that front. We're going to bring in Josh from Orange County because last week with Jamie was so amazing that we're going to try to change up our dynamic a little bit and bring agents on that have been there and done that and have more to share than just what I have to share. So just for an idea, as you guys are all aware, we do have our brokerage, mortgage, and the escrow, and our push is um, allowing our sellers to have options, right? And so those options are going to include a cash offer as their kind of their base, their floor, and then from that cash offer, you can offer them like a highest price guarantee. So we're going to be backed by a capital partner called Easy Street, white label our product through our First Link Mortgage, and it's going to allow us to do a lot of cool things on that front. And so you can offer your cash price, move now price. Then you can say, hey, look, if that doesn't work for you guys, we can list it, try to get you guys top dollar. But you guys know at the end of the day, if you're in a hurry, you guys have to move. Then here is the bottom line. So that's going to be rolling out next week, and I will walk you guys all through that when Josh is here. But we have Bill that just jumped on. Morning, Bill. You want to jump in and share some mortgage news?
Sure. Morning, everybody. I'm guessing Kobe's not here, but if he is, want to say congratulations. Um, and congratulations, you too, Craig.
Yeah, thank you. Well,
Um,
what the part you guys missed before you guys jumped on, I was talking to TJ. So Kobe was helping me get the link, as you guys know, this is Kobe's little channel. But I'm like, dude, where's the password? Where's the password? Like it was ghosted me for like 20 minutes. He's like, sorry, man, the baby just puked all over me. I had to go clean it all off. So yeah, the joys of parenthood.
yeah.
All right, buddy, go ahead.
All right, cool. So the really what everybody's waiting on is to see what happens this evening if we end up bombing Iran mercilessly. The essentially oil prices are approaching $120 a barrel, and that would be about double where they had been. And historically, every time that's happened, it's caused some sort of a recession. Now that's obviously not good news, but with mortgage rates, typically bad news is good news. So we'll see what happens. We're kind of in a weird spot right now because the prices of oil going up is obviously inflationary. That's bad for interest rates. But the fear of a recession is good for interest rates. So they've actually kind of been sitting in this holding pattern. So right now on a conventional, the standard regular rate on a conventional loan would be 6.5% on a 30-year fixed. That's on $1 million purchase, 20% down, $800,000 loan amount. Now, if we're using the bundle and save program, your buyers would get a credit on that interest rate of 3/4 of a point. So that would be about $6,000 credit that they would get towards their closing costs. If we use that credit towards their interest rate, we're at 6.25%. On $1 million purchase, 20% down. What that means, 6.5 is about $63.50 per month, including tax and insurance. The bundle and save 6.25, $62.25 per month. $1 million purchase, 20% down. FHA loans rates are still looking pretty good, actually. They've got a little bit of a lower cap before you get in the jumbo range. So if you do a FHA purchase at $850,000, client can put down 3.5%. These are also the programs where we see down payment assistance. The rates are always higher on those, but if they're going to put their 3.5% down, 30-year fix is at 5.75. And the bundle and save rate, if you use the credit, would be 5.5%. What that means in terms of a payment: $850,000 house, 3.5% down, 5.75 is about 6,500. 5.5 is 6,375, and that includes the PMI. With FHA, if you're not familiar with FHA loans, I know a lot of people kind of shy away from them because they have a little bit higher standard when it comes to the appraisal in terms of property value, or excuse me, property condition. But it's a great program because whether your credit score is 660 or 760, you get the same rate. So even if somebody with like a 700 credit score might find a better option with FHA than they would on a conventional loan. They also have the low down payment option, and it's more relaxed credit guidelines. So you don't have to make quite as much money to get a same size loan. And then for VA, if you have any veterans, we're sitting at 6% right now on $1 million. That's a VA jumbo loan. 6%, $1 million, no money down required on a VA. You just need to be a veteran or an active duty service member or a survivor of a veteran. The bundle and save rate is 5.625. So $1 million with no money down, 6%, you're at 74.25 per month, including tax and insurance. If the 5.625, it's 71.80, including tax and insurance. Those are estimates on the tax and insurance, but should be pretty close. So that's good news. Rates are holding. They have certainly been worse through the course of this conflict. As far as the market is concerned, the inventory, there's 723,000 homes on the market. 34% of those have seen a price cut. To me, that indicates it's a buyer's market. When you're dealing with people and they're looking at these rates and they're like, oh, I don't know, the rates have gone up. I don't know if I should do anything. Now's the time to negotiate. Now, a lot of the buyers I'm working with now are doing 2-1 temporary buy downs, and they're able to get the seller to pay for that because their listings have been sitting on the market. So that's where you want to encourage people that, hey, look, now is an opportunity. When the rates are low, I'm sure you guys were seeing competitive offers, having to get, bidding wars, that kind of thing. A lot of people don't want to be involved in that. And so now is the time. I really just need to talk to them about the fact that, this is likely just a blip, this war right now. And all other signs are pointing us in the direction of lower rates going forward. So you buy a house now, you're almost certainly going to have an opportunity to refinance into a lower payment, saving hundreds of dollars over the, next 12 to 24 months. So that's my piece today. Tim's not going to be able to make it today, but if anyone has questions, please feel free to reach out, and we're here to help.
Does anybody have any questions on that front? Loans?
I do. Just from a seller's standpoint, I know that you mentioned it's probably more of a buyer's market right now, just with the rates now, and then having the opportunity to refinance when rates comes down. But if you're explaining it from a seller's standpoint on why it'd probably be a better idea to sell right now, because in our past meetings it was a little bit more geared towards it might be a little bit more of a seller's market.
Well, I think that's a good question. I mean, I think I would probably be talking to people about I'd be talking to people about the war, honestly, and then the thought that, hey, there could be a recession coming. Historically, every single time oil prices have doubled in a short period of time, there's been a recession. So,
Yep.
So the idea might be, hey, this might be your opportunity. If in case the economy gets worse, and we find ourselves in that spot, like people are still buying right now. That inventory, 723,000, is kind of like an even market. It's not a ton of inventory, but it's not low inventory either. So, that's not exactly, it's a pretty level market in terms of inventory. So, but I think I'd be talking about future economic concerns if people are kind of waffling.
Okay, perfect. Thank you.
Yeah, anybody else on that? Because I know we're in uncertain times on this front. So if anybody has any questions in regards to anything, for Bill, this is a small group today. So anybody, floor is open, and if anybody has any questions or wants to talk about anything.
I have a question for you, Bill.
Sure.
So I put an offer in for some clients of mine yesterday on a home, and the listing agent, she emailed me last night, and she asked why they are putting such a low down payment. They're putting 20% down. She said she's trying to get an idea of the risk for them with 80% financing and the current interest rates. 20% down seems pretty.
Yeah, it's not really a low down payment.
Right. But just, she mentioned the interest rates, and I'm sitting here thinking, okay, well, they'd like to hold on to their cash, right? Because of the current interest rates. But she had a different point of view as far as putting a larger percent down. So I'm trying to understand why an agent would say something like that.
Sure. First off, what's the purchase price of the home?
Purchase price is 1.4, and my clients offered 1.425.
1.425, and here in California.
Yes.
Okay. You are kind of approaching jumbo territory. So 1.425, that's about 20% is what, $280,000. So when you're in conventional loan territory, it's pretty easy to go. Let's just say for them, the real risk is that the home doesn't appraise, right? So if you're offering 1.425 and the appraisal comes in at $1,350,000 on there, I mean, for one, is your buyer going to really want to do that? That's not what she's thinking about. She's thinking about, could they come up with that difference? The way that works is that the loan would now be based off of a 20% down payment on the appraised value of $1,300,000. So that would be $260,000, and then they'd be stuck bringing in the additional $75,000. So their down payment now, increases significantly. And so the question is, do they have the funds to do that? If something like that were to happen, that's where the risk lies for them. When you're in a conventional loan, you can just easily say, okay, well, we'll flip it so the loan is 10% of the appraised value, and then it kind of offsets the difference. So when 20% down is usually pretty good, but in that jumbo category, there are programs that will allow less than 20% down, but the rates are quite a bit higher. So that would be, how are their reserves otherwise beyond the 20%?
Great. Yeah.
Okay.
Yeah.
So I mean, that's what the concern would be. But in your case, I just, show them as many, the proof of funds, however much proof of funds you have. If you have a lot of additional proof of funds, just say, hey, look, they have this money, there's no risk. They just don't really feel like putting it all into the house, which is reasonable. So
got it. Okay. Yeah. I was also wondering, it is a 55 and up community. So I was wondering if that played a part in potentially the appraisal. I don't know. I've never done business in 55 and up. Yeah.
Well, the comps, the appraiser is going to want to get comps from that community directly or from other 55 plus communities, because it is, different for the market. How does it look? Do you think it's valued, priced right?
I do. Yeah.
Okay. Yeah. I mean, if you want to send me the address, I can take a look too and let you know if I have any concerns. But for appraisers, they're looking for properties that are the most like kind. So they don't care about price per square foot or really, but what they're looking for is similar square footage, similar location, ideally within a mile or less, something that's sold within the most recent time frame. 6 months or less is kind of the standard, but if there's something that's sold in the last 3 months, they're going to take that at a higher consideration, and then property condition being one of the most key things. So when you're comping, if you just get a list and it shows the sales, make sure you go look at the pictures on those and see how similar it is to the home you're looking at.
Okay, awesome. Thank you.
You bet.
Hey, Bill, also in the chat, do you have access to the chat?
Yep.
Take a look at those and see if there's anything that you have programmed specifically that you can maybe throw into an email or talk about here.
Sure. Yeah, I can put something together. I mean, I will say one thing about the down payment assistance program, I just priced one out yesterday. Someone was asking me about loans for first responders, and surprisingly, there's not a lot of that. We do have a program that allows the down payment assistance. Usually, there's requirements about income or specific area for down payment assistance, but with this program, they don't have any of those if you're a first responder. But the rates are awful. I mean, you pay at least a 1% higher rate on the down payment assistance thing. They'll give you 2% or 3.5% towards your down payment. So if you can convince people to come up do an FHA loan or a conventional loan with 3% down or 3.5% down, we can almost always put it together so that we're covering all the other closing costs, and it's kind of a similar deal to what they would get otherwise, but they're actually getting an interest rate that's 1% less. So down payment assistance is great. It's a great marketing tool, but the programs themselves are lacking a little bit.
Hey, Bill, just for fun, put your info back in this chat for everybody so they all have that.
Yeah.
And so one thing that, in these questions that you guys have, the nice thing about having Bill in-house is these questions, you can ask him. I have buyers that are going to him right now asking him best case scenario, right? Like if we are buying a house for 800 grand, what are my options? What are my best options? Do I put down 20%? Do I put down 10? Do I save the other 10%? What is it that best fits my current situation? And so we're not, or Bill is not here to he can answer questions freely. You're not going to pigeonhole your buyer into doing something that they don't want to do. You can give Bill information that doesn't need to go to the lender. Being a broker, he's not an underwriter, so you can tell him whatever you want. And so walk through these different scenarios with him, explain the situation, just like Elisa just did, talking about down payment and what they have and the funds that are available to them. They may not want to put all their 20% down. They may not want to do a program that doesn't fit their current needs. So again, utilize him, walk through different scenarios. It's super helpful. Not to give you more work, Bill, but you know what I mean? Just lean on him.
No. That's the idea. I mean, the point is to make sure because when it comes to the loan, it's just not so cut and dry. There's multiple ways we can structure it. We can work with the loan amount. We can buy down the interest rate. We can, there's a lot of things that we can do. The key is to really find out what's important to your client, and then we try to structure the financing around that. So,
Yeah.
So the important questions are, what can you actually afford to pay every month? You have 20% down. Do you have any extra money in the bank? Are you comfortable with that? Would you like to put down less? What's their ideal situation? And then what could they do if they had to? Like if we have those two metrics, then we can generally find something that's going to work out.
Yeah. Very cool. Well, thank you, Bill. Is there any other questions for Bill or about mortgage or anything on that front? Nope. Cool. Well, thank you for that, Bill. And I'll probably keep today just short and sweet. Is there, talking about last week when we had Jamie on talking about cold calls or different strategies that people have, does anybody have any questions on strategy or on anything specific in regards to lead generation? Nothing. I love it. Just a blank computer screen, just blank stares right back at me. This is awesome. This is more reason to meet, to have these things in person. It's like, at least like hear you laughing at me. But anyways, all right. Well, I'm going to end it. This will be short for this week. Anybody question wise, ask now. Next week will be with Josh Colburn. He's our top producing agent. He's very curious on the investing side, the fund that we're putting together, what we have that we're working on. And so I'll be going through that in detail next week with Josh. And hopefully you guys are here for that. Any questions you guys have on investing? Cool. Book club. We're going to make this next book a little bit easier. I think the first jump out of the gate with Joe Dispenza was a little bit deep for a lot of people. So we're going to make it probably Jamie's recommendation with Grant Cardone's book. I forgot what that was called. Jamie, jump in. It was Average or something.
Be Obsessed or Be Average.
Be Obsessed or Be Average. We'll probably jump to that book or some kind of a sales training book. So we'll be rolling that out next week too. And We're putting together a lot of internal things that we can roll out to all you guys to help you guys in your businesses. And so again, as the broker, trying to figure out what I can do to be a resource for you guys. So please share if I can help you in any way. Reach out. We're trying to do what we can to help you guys, and so feedback's always appreciated. But that's it. So, anybody else? Hearing nothing? Nothing. Come on, somebody say bye. At least say just anybody. Just
See you later, Grandpa.
Bye,
all
everybody.
right.
Yeah,
Cool.
let that
All right,
beard
guys. Well, thanks for
do
joining.
the full Santa Claus beard.
I'm gonna
Thanks,
grow
yeah.
it in just for that. Yeah.
Yeah.
All right, guys. We'll talk to you guys next week.
Later.
Bye, guys.
Yeah.